Now it's working.
All right, all right.
It's great to be
We're gonna
here.
wake everyone up. Yeah. So Jim, you know sort of the evolution of VC better than most because you evolved your own VC career from one of the top firms, Excel, which everyone will know from its European and Asian and U.S. investments, to Breyer Capital, which I've been assured is a lot more than a family office. So why don't you tell us a bit about what you guys have focused on at Breyer Capital in the past few years and where the firm is at, and then we can go in some fun places.
Perfect. Well, it's wonderful to be here. Venture capital is just an inspiring business. I joined Accel Partners in 1987. 4 months later, the market crashed. I was an associate, became a partner, and then for 18 years, the managing partner. And first, I'd like to say how pleased I am today about Accel London and the lovely article on Accel London. Kevin Kamoli, who founded Accel London, was a business school classmate of mine at Harvard, and when in 2000, we at Accel were starting to think about what international initiatives should be. Kevin was one of my first calls, and it worked out so well. Sonali, Harry, Kevin deserve just great credit, and it's been so much fun to watch that evolve.
So Jim is such a good public speaker. What he just did as the speaker is plug the moderator's work, which is kind of crazy. But what he's referring to is an article that I published today, the Forbes Midas Europe list, which if you haven't checked out yet, 2 Excel partners, Kevin Kamoli and Sonali de Rijker, were 2 of 4 partners to make the list. They were both in the top 5, and I published an article about them with interviews with both. So do check that out, but stop plugging my work and then talk about Breyer Capital.
Perfect. So the evolution of venture capital continues, and I think there are so many different ways to succeed in venture capital. So we just heard from SoftBank. SoftBank, in terms of their capital and their global reach and their strategy, is changing the venture capital business considerably. We have great localized competition around the world, including here in Europe, China, India, and geographies in the US. And then one can focus on specific technology areas. And that's where I decided in 2013 to focus my time. And so I have been personally passionate as well as personally passionate about investing in artificial intelligence and how artificial intelligence meets and enhances, whether it's financial services, investing, quant funds, patients, hospitals, medicine. And it was really Mark Zuckerberg in 2012 who was a defining discussion. I was still on the board of Facebook at that time, and he had a personal passion in artificial intelligence. And as we looked at AI opportunities at Facebook while I was on the board, something had changed. AI has been around, of course, since 1956. There have been nuclear winters every decade when it comes to AI. Too many companies are branded AI when they're not. But we are seeing phenomenal opportunities in applying very deep learning to different segments, whether it's medicine, financial services. And 2 quick stories on AI. I was a guest speaker a couple of weeks ago at Stanford at a deep learning class. There were 850 students in the class, barely enough to fit into the largest auditorium, even more than that. And the fire marshal had to come in and close down the class. That says a lot about where we are in deep learning and machine learning. I just returned from China. I was there for the past week for the Tsinghua Advisory Board. There were 20 of us there as part of the advisory board. We spoke to students, and the passion that a Mark Zuckerberg or a Tim Cook, or in this case, the 3 Chinese leaders, Pony Ma, Robin Lee and Jack Ma, who were all in attendance for a couple days, around AI and the different segments, whether it's autonomy, machine vision, applications to consumer, applications to medicine. I just fundamentally believe we're a couple innings into a very long upside game where entrepreneurs and venture capitalists have an opportunity to build really defining new companies where AI is foundational. It's certainly not a fad.
Now, do you see there being any sort of race between the US and maybe some of the European leading universities and then China to kind of get the edge in what might be somewhat similar AI structures? I mean, it feels like a lot of researchers are looking at deep learning, but then that could mean so many different things. And I think of Kai-Fu Lee, formerly of Google China, has very vocally said that he believes that the Chinese government is giving them so much firepower to move ahead of the US and Europe. And I'm curious, you were just over there. Does that ring true to you, or do you feel like it's not so much a race? What would be your take?
Oh, it's an incredible race, and it's better to be a great AI postdoc or researcher today than a future NFL quarterback. I can use other sports analogies. Perhaps if it's Premier League soccer, it would be close to AI. This is in many ways like the space race in the late 50s, early 60s, only the scarcity of talent is even more extreme. There are perhaps 10 universities around the world that are producing, I would imagine, 90 to 95% of the truly brilliant AI scientists. You have Google, Facebook, Amazon, Apple, plenty of others, IBM, actively recruiting the very best talent. And one characteristic that I certainly see is the intensity for recruiting the best talent is only going up. And our job as venture capitalists is to be on the front lines, do the reference checks with Pony Ma or Mark Zuckerberg, the best talent, and try to attract some of the best talent to startups that are using many of the AI platforms as foundations to then apply vertical market solutions. And so my day would be very typically to be spending time on universities. In the last month, I've spent several days at Harvard, MIT, Stanford, Berkeley, Oxford, Cambridge, Tsinghua, Beida, and more to come, because the centers of academic learning right now are more important than ever before.
I'd feel dumb in about 2 minutes at all those places in their AI labs, at least. It's interesting that you mention Pony Ma, Mark Zuckerberg, these sort of big tech company leaders as people you might take inspiration from or bounce ideas off of in AI, because from the startup perspective, some people are concerned that those companies are just gobbling everyone up who's interesting and sort of sucking oxygen out of the early stage ecosystem by being so opportunistic to acquire these technologies. You kind of sit on both sides sometimes. So how do you see that tension between innovation and sort of the race of the big tech co's?
It's a race, and I have never been in a period of time where if we look at the 7 or 8 best technology companies in the world, they are run and managed by founder-driven leaders. And so the companies you mentioned, Alex, are intense. They're meeting with students. The leaders are personally meeting with students and recruiting many of the very best postdocs. And of course, Google recruits faculty and others recruit faculty. I am of the belief, however, that there are still so many people who are passionate about starting a business, building a product, and AI is perhaps the best place to do it because of the mix of skills that is so necessary. So if I have to predict the next decade from a market capitalization standpoint, the 7 or 8 best internet companies in the world will be trading higher, and there will be a group of 10 to 20 new companies that are achieving multi-billion-dollar market caps that are just being formed today, and the common thread is around deep learning, AI, and having top academic talent around the world to be part of that.
Now, you're no longer on the Facebook board, but you've spent many sessions with their leadership. You know them very well. How do you think about responsibility in this kind of emerging era, especially as we go into AI? I'm thinking also of the Russia concerns that are big in the US right now. Some people are, I saw people debating on Twitter yesterday all day. Should a company like Facebook know if one of its investors was backed by a Russian state bank? Do they have a responsibility to know that? Should they know better? And it's kind of similar to the question we heard about SoftBank. Where do you see corporate responsibility going? And you know, in your interactions with Facebook, is that something that companies should be watching for early on, like state investment or sort of those behind-the-scenes deals that we might not hear about till years later?
I saw Mark last week, and we had a lot of time together. Sheryl Sandberg is someone who as head of the compensation committee there for 8 years, every time I sat down with Sheryl, I would give her an A+, and she'd say, please, Jim, not an A+, what can I be doing better? The Facebook leadership is extraordinary, and I think they're taking right now, from where I sit, all the right actions and should be taking all the right actions because the world, of course, has become so much more complex. I just believe the talent and the leadership at Facebook is extraordinary, and I think they're doing many of the right things and will need to do many of the right things.
So through Midas, I've gotten to know Yuri Milner pretty well, and I've covered DST. It wasn't as shocking to me the notion that their fund might be backed by a Russian state bank, but to some people that's really shocking in today's climate. Since we have a lot of investors here, I'm curious, do you think that sort of who your LP is in that sense could have a political statement, and do people kind of vote in a way with their dollars based on who they might take money from as LPs?
Oh, I think having the right LPs makes an enormous difference. And there are a lot of great LPs. There are LPs who are very long-term oriented. In the panel before, Connie asked about time frame. I think something that is changing and needs to change is the time frame that LPs apply to venture capitalists. It used to be 10, 12 years was about right in terms of funds, but every 3 or 4 years, the new investment period would finish. Permanent capital or semi-permanent capital, holding on for multiple years, these are all where general partners and limited partners should be aligned. And Alex, to your question, should there be great due diligence by the general partners on the limited partners, just as the limited partners should do great due diligence on the GPs, and we all should be doing as much due diligence on the entrepreneurs as we can? The answer is yes. Visibility, clarity makes a big difference.
What about startups about their investors' own investors? Like, have you ever been asked by a founder who's bankrolling Breyer Capital besides Jim Breyer? I know you're in a unique position there because of all your past success, but do you think there should be visibility between founder and sort of where the money starts as well?
Absolutely. Okay. Simple as that.
Great. If you were starting Breyer Capital today without your Excel background, without Facebook, let's say with a much smaller check size, would you be concerned about all the money coming from SoftBank and the later stage kind of wiping you out or overwhelming your ability to write a check? Or what would you do if you were, starting from scratch right now?
One, love venture capital. Just as we advise the entrepreneurs to love what they do, pick a great segment, but be passionate about that segment. In venture capital, it's the same. And picking something, an area, whether it's a geography, whether it's a technology, whether it's some combination where there's a mission that you can get excited about, that's my advice. It's a wonderful business because there's always a refresh. There are new entrepreneurs, there are new opportunities. It's far more global than ever before. The scaling that is occurring in China, whether it's the top-down AI initiatives, as well as many of the underlying growth initiatives in healthcare, are astounding. I've never seen anything like it. And as a venture capitalist, it's an opportunity to today define venture capital, our role, expertise and segment, go deep, and it's a really fascinating time. So the answer is, I'm always concerned about everything, including the SoftBank size.
But the Vision Fund doesn't scare you at all.
Oh, I'm concerned about everything, but it would not stop me for a moment in pursuing a new venture capital firm and opportunity.
So what about the flip side? We are tearing through this time. We're supposed to also talk about the next 10 years, and on the other side of SoftBank, you have ICOs and efforts to maybe circumvent VC or try a new kind of investment altogether. Do you find that interesting, or what would be your take for investors kind of watching these ICOs start to happen?
Oh, I'm watching closely. I'm watching very closely, and venture capital in the last 10 years, Alex, and as you know, whether it was seed funders, geographically focused firms, small groups of seed funders that have been able to get together, venture capital can be persistent in terms of success and returns, but it's all about returns. And there are opportunities with ICOs. I think there are fascinating blockchain platform opportunities, but at the same time, I'm a very big believer, a deeply focused, thoughtful venture capital strategy that is not trying to fight yesterday's war is one that is always successful if you blend team chemistry, thoughtfulness, and deep analytics around what one is trying to do.
We started the day with Tim Draper asking the Prime Minister of Portugal to make Portugal more ICO friendly. Have you, to close the day, have you invested in any blockchain companies or ICOs, or what's been the portfolio strategy so far?
The blockchain initiative, the answer is yes. I invested in the Series A of Circle, which has a big Dublin presence, in 2013. Bitcoin at that time was trading at 90. It was both Bitcoin, but it was architecturally a blockchain company. Still very large investor, in fact, the largest investor in Circle, as they continue to evolve in many of the areas around blockchain and coin initiatives. Kensho Analytics is another, where there are deep blockchain initiatives where they work with large enterprises, BlackRock and others, to provide deep analytics, and so much of that is around blockchain. At the same time, I watch, I try to learn, but I'm not in the camp of thinking that it will change everything overnight, but I sure am trying to thoughtfully watch closely and talk to the best entrepreneurs and scientists.
I'll close with, if I were to make you pick between 5, 10 years, and 20 years plus, how long will it take for a non-coin blockchain company to predominantly disrupt a legacy infrastructure, whether it's in logistics, retail with counterfeiting, any application? How long do you think we are from a real mainstream blockchain application?
5 years, for sure. It's happening so quickly. It's happening at the leading financial services, retailing companies. It's happening around the world, including China. And for sure, I would take the 5-year bet and not the 10 or 20.
Well, I could talk to you all day, but everyone, can we get a round of applause for Jim Breyer?
Alex, thank you.